Good evening, good morning, good night, wherever you're watching this transmission. 'Tis I, Mike Martins, your housing discussion guru. We're just here to talk about some housing and trends in the housing market. I just want to thank everyone for joining me, all the support. A lot of people locally buying from my eBay store, locally from this channel. I want to say thank you for the support on that. Also, I want to thank all the new subscribers that have come along and jumped aboard. And sorry, it sounds like there's a huge dump truck parking out in front of my house here. I really hope he turns off his motor. Anyways, yeah, so lots going on in the markets right now in the housing sector. And also I want to bring up the fact that interest rates going up all the way. So this is going to be an interest rates all the way show. Sorry guys, there's a really loud truck outside. It's got to be at least 20-30 ton truck, and I might have to close my window and sacrifice my breeze coming through here. It is probably 35 Celsius here right now. Yesterday we reached a high of 41. It was cooking. It was cooking like back bacon on a burner. So yeah. So I'm pretty hot right now. I already took 3 showers today to try to cool down just try to cool down. But interest rates, are they cooling down? Is the housing market cooling down? That's what you came for tonight, and that's what I'm going to give you. Mike Martins in Trends of the Housing Market. So guys, for going slightly off topic from time to time, but people ask about what's going on in the area, it is very hot here, guys. It's about 30, like I said, it's about 30, 35 today, so you got to bear with me. Delusionalist starts to kick in when it's this hot. Anyways, rate hikes. What is going on with rate hikes? Rate hikes all over the way, all over the place. And surprisingly, after China puts on restrictions on its capital outflow, a lot of countries are now looking to raise interest rates. Now, let's go over some of the basics before we go anywhere, okay? What happens if interest rates go up? Okay, these are questions that people ask for. We're going to go over them really quick. Changes in interest rate affect the public's demand for goods and services and thus aggregate investment spending. A decrease in interest rates lower the cost of borrowing, which encourages business to increase investment spending. Okay. Are stock prices affected by interest rates? That's another commonly asked question. When the Fed increases federal funds, it does not directly affect the stock market itself. The only truly direct effect, it becomes more expensive for banks to borrow money from the Fed. But, as noted above, increase in the federal funds rate have a ripple effect. Okay, let's keep going. What happens when you raise interest rates? What happens when interest rates rise? When the Fed increases the federal funds rate, it does not directly affect the stock market itself. Only direct effect becomes more expensive for banks to borrow. We did that. Okay, why higher interest rates are good? Whenever interest rates are rising or falling, you commonly hear about the federal funds rate because higher interest rates mean higher borrowing costs. People will eventually start spending less. The demand for goods and services will then drop, which will cause an inflation or fall. Which will cause inflation to fall. Again, keyword, which will cause inflation to fall when interest rates are risen. You don't want to go into inflation. You don't want to go into inflationary periods. Economies do go from inflationary periods from time to time, which sometimes is a good thing for trades and stuff, but it's very bad. It's very less attractive when it comes to foreign investing and stuff. So what happens to the value of the dollar when interest rates rise? Generally, higher interest rates increase the value of the country's currency. Higher interest rates tend to attract foreign investment. I just said that. Increasing the demand and value of the home country's currency. So basically what happens, this is why when you go to Mexico, they prefer the US dollar, or they prefer the Canadian or any other dollar besides their own currency. So they value and they favor other countries' currencies, but they're even their own. They value their own currency more than other countries' currencies because of the it's a safer haven than the currency they have in their country. What investments do well in inflation? Real estate. Real estate is a popular choice not only because rising prices increase the resale value of property over time, but because real estate can also be used as a generate rental income. Gold is a good popular inflation to hedge. I said that last week and the week before. Gold is the best inflation against the best inflationary tool against rising interest rates or inflation. Sorry, against inflation. Sorry, the best inflation hedge is gold, and I keep talking about that all the time. Oil, stocks, and inflation indexed bonds. So I wanted to read those out to you guys. Sorry, my vision's kind of blurry. Once again, it is plus, I think it's 33 degrees in this room, 34 degrees Celsius. So it is very hot in here, and I'm already building up a line of sweat here. And let me continue here. So now that you got a small crash course on when interest rates rise and what. So this is hyperinflation. Please do not mistake what hyperinflation is. This is hyperinflation. This is the $1 trillion Reserve Bank of Zimbabwe. $100 trillion. Now you guys need to understand what's happening with this. So let me find that graph. I found a graph somewhere here. There we go. Let's see if I could find something more. Yeah, there used to be a graph. And this is it here. There's the starving billionaire. This guy's a billionaire. He is. On paper, he is. Just like these houses. Just like these houses that right now. These houses, it's all paper wealth. And that's exactly what's happening. So let's move on. Now, I pulled this article out from, I think it's from today, actually. Yeah, it's from today. And it says, what would happen if the Federal Reserve doesn't raise interest rates? So this paragraph here is the key paragraph, guys, that you guys need to know. Again, the article is called, What Would Happen If the Federal Reserve Doesn't Raise Interest Rate? Okay? The reality is that the U.S. Federal Reserve may do greater harm to the economy by waiting longer to raise interest rates. That's it right there. The damage that's caused when interest rates do not go up. So we're going to cover the interest rate hikes in Australia, New Zealand, the UK, and Canada, and the United States in this show to get you guys up to date on what's happening with rate hikes across the board. And so I'm going to read this paragraph again. The reality is that the U.S. Federal Reserve may do greater harm to the economy by waiting longer to raise interest rates. I could say that till I'm blue in the face. Why? Its failure to hike rates would blow more air into the already overextended market bubble. That's exactly what's happening, guys. It is only a matter of time until the black swan event or an unforeseen external force crashes the market. Maybe by rising interest rates, this would put a brake on the speculation. This is really well written, guys. This is exactly what I want to say. This is it right here. And some sort of sense of reality would kick in. I am, of course, talking about some of the soft landings where the Dow Jones Industrial Average could start crushing downwards while the U.S. economy continues to coast upwards, slowly yet on solid footing. This is the best case scenario. So this is a really, really well written article here. This piece right here at the bottom, this last piece, the amount of damage that one does to one country when interest rates are at nothing or next to zero or next to nothing. Burning the midnight oil with Mike Martins with trends in the housing market. And before we kick off the first article today, guys, I want to say special thank you. There's so many people I have to thank. Sending me emails and stuff and talking. Lots of people in Toronto and Sydney and Melbourne and in parts of California that have been watching me and saying that they have not purchased, kind of thinking of, you know, kind of thinking twice before spending more money they could ever afford to pay back. Realizing that they're not... Oh, yeah, so I'm not making this up. Look at this, 34. It's so hot here, guys. Like, it's very hot. I'm already transpiring here. Perspiring here. Anyways, Metal Gear Mark III is in the... Hey, how's it going, buddy? Thanks for joining us in the comment section. Welcome to our Rate Hike Edition show. I appreciate everyone for joining us tonight and watching this on Rewind. Remember, guys, if you watch this on Rewind, it won't be commercial. You will have commercials. So, Owen says, "Hey, Mike. Hey, Owen, buddy. Good to see you in the comments." Donald G, never miss a show. Thanks, buddy. Donald, I appreciate it very much. Donald, if you wanna, and Owen, guys, start emailing me phone numbers, guys. If you guys want to start calling you guys to come on the show. Come on the show. I was going to say that at the end, but if you guys want to come on the show, let me know. I could call you at a specific time when I'm on live. And especially if you do watch my show periodically, you know what time I'm on, so you will be hopefully free to call into the show, and we could have some feedback on what you guys think is happening in the markets. And so, yeah, here we go. Rate hikes, rate hikes, rate hikes, rate hikes. Here we go. Rate hikes everywhere. So, beginning of the show, I covered what will happen, kind of basic questions about interest rates and what happens, and I discussed hyperinflation and what's going on, not to confuse hyperinflation with inflation, and keeping it in check by raising interest rates, or hedging against it. The best paragraph you'll ever read in your life when it comes to the reality of raising rates. And let's kick off our first article, guys. Canadian economy grew 0.5% in May, prompting talk of a fall rate hike. So here we go. So they're not gonna, according to this article, rate hike seems unlikely. I don't think rates are high enough, people, to hedge against what's going on right now. I don't think rates are anywhere near where they should be. Canadian economy grew 0.5%. You guys be the judge. Comment below. The Canadian economy has topped expectations with growth of 0.5% in May. The month-over-month increase was strong rebound from the rise of 0.1% in April when harsh weather weighed on the GDP. Okay. The May reading was 2 notches above the consensus expectation for 0.3% increase, according to the economists polled by Bloomberg. So there's a little video here. I'm not sure if I should play this. It's just variable and fixed rate. What the interest rate hike means for your mortgage. So what they're trying to do, I guess, what the media is trying to swing here, is they're trying to swing away where, hey, maybe we won't raise interest rates now for you guys. And then now putting up this video, let's watch it. Let's see how long it is. There's a bunch of music here. I don't want to get flagged.
Interest rates once again on Wednesday. It was the fourth hike in the span of 12 months. The central bank's trend-setting policy rate now stands at 1.5%, up from just 0.5% last July. In this edition of our Money 123 series with Erica Alini, we're asking, how will this latest rate increase affect Canadians? Erica, what do borrowers and savers need to know?
Robin, at first glance, the implications of higher interest rates are pretty simple. It's bad news for borrowers and good news for savers. But there are other factors that savvy consumers should keep in mind. Let's start with what happens when interest rates go up. Variable rates on mortgages and lines of credit go up as well. So what does this mean for borrowers? Let's look at mortgages first. Despite the string of interest rate hikes we've seen, mortgage brokers I've spoken with are starting to argue in favor of variable rate mortgages for borrowers who have the flexibility to absorb additional rate hikes. The spread between fixed and variable interest rates on new mortgages has been widening, meaning that borrowers are paying an increasingly high premium for the security of a fixed rate. If you have a line of credit with a floating rate, there really isn't a silver lining, unfortunately. Borrowing costs are going up, period. But a home equity line of credit, or HELOC, still looks like a pretty good way to finance a home renovation. And that's because, like a credit card and unlike a loan, it allows homeowners to borrow as they go. That flexibility is handy during a reno where people might go over budget. But as interest rates keep rising, once borrowing for the reno is over, homeowners might want to turn that home equity line of credit into a fixed rate loan. And what does it mean for savers? Well, that's a different story. The interest rates that banks pay on investments like guaranteed investment certificates, or GICs, don't move in tandem with the Bank of Canada's rate. Usually, there's a lag of a few weeks before GIC rates rise, and the banks won't necessarily bump those rates up as much as the Bank of Canada rate. In fact, they might not adjust GIC rates at all. Savers should also keep in mind that the interest rate you can earn with a simple savings account at some of Canada's online banks and credit unions right now can be higher than what you can get by parking your money for 5 years in a GIC at some of the big banks. So if you're thinking of investing in a GIC, maybe wait a few weeks to see if lenders start offering higher rates. If you're in the market for a home or renewing your mortgage, maybe take a close look at variable rate mortgages. And if you're using
All right, that was that. That gave you an explanation. So if you're on like a line of credits and you got credit cards with revolving debt and you're paying a blended rate and stuff like that, what happens usually is rates go up on everything. So rates will go up on those credit cards, lines of credit, and none of that stuff is secured, right? Because it's always unsecured, right? And anything can go any way, you know what I'm saying? Okay, lots of people commenting in the comments section here. I'll get to your comments in a second. Let's continue reading. 19 out of 20 sectors tracked by Statistics Canada recorded a pickup in economic activity. I don't know where this economic activity pickup is coming from. So, according to this article, if you're just tuning in, Canadian economy grew 0.5% in May, prompting talk of fall rate hike. So they want to cancel the fall rate hike, which is damaging to the economy if they don't raise rates. It's very damaging. And like the article I read before, the black swan will come in and boom. Although the energy sector disruptions like production shutdowns in Alberta's Syncrude plant are expected to weigh on the June GDP figures, the economy is on track for a strong second quarter growth that the Bank of Canada expected. CIBC chief economist Avery Sheffield noted shortly after the release. Barring the bad news on the NAFTA or auto tariff front, the Bank of Canada will be raising rates in October, which is now our call. So that's that with that. Is Canada, so let's tie in this article here. Canada's economy rebounds, but imminent rate hike seems unlikely. So they're looking at not wanting to raise rates now. This is going to be a lot more damaging, and it's going to be a lot more of a nightmare coming forward in the future. It's just going to prolong the problem. So Ottawa, Canada's economy rebounded in May after a series of challenges in April, but analysts played down the chances of intermittent rate hike, saying the Bank of Canada already predicted strong second quarter growth. Statistics Canada said on Tuesday that GDP grew. Okay, I read that part. The retail sector expanded 2%, while the construction posted 0.7% gain. And the oil and gas extraction sector rose 2.5% on increased crude bitumen exploitation. The only one of 20 major industries to sink, the utility sector, which shrank by 2.4% on lower demand for electric power generation, transmission, and distribution, and wealth improvement. Okay, the Canadian dollar barely moved around 10 a.m., was trading at $1.30 to the US dollar, or 74.46 cents US. Separately, StatsCan said Canadian producer prices rose 0.5% in June from May, the sixth consecutive increase on higher price for non-ferrous metals production and motorized and recreational vehicle. So let's hit to the comment section right now from this article here. Okay, George Pereira, hey Mike, cost of utilities for your home going up. The cost of food and gas are going up. Yeah, I did a rewind article. I did an article, a story on my channel that I reposted from 3 years ago in Vancouver. A YouTube video I did. So I rehashed it and kind of brought it back and cleaned it up a bit. From 3 years ago, the price of food superseded or is more expensive than my rent. The price of food for a family of 3, at the time was a family of 4 actually, was more expensive than my rent. So I wanted to throw that out there, okay? Because the price of food, oil, gas is gonna keep going up, and it's gonna take away from people's disposable income to be able to spend on other things and to allow other industries to grow. So Kevin Thompson says GICs are for people with no risk tolerance. That's correct, 1,000,000%. The average Canadian only has $200 to spare. That is going to be gone now with the cost of living going up. Yeah, so what's going to happen is our economy is going to go up because it's going to be... economies are built and based off exports, fabrication. A good economy is based off exports. Production, second. I think exports first, production second. Employment could be first or second or third, but good employment in the private sector. I don't give a crap about the public sector. Oh, I work for the government. Good, I'm paying you to work for the government. And, oh, but I pay taxes. Yeah, still our money you're paying. So it's got to be private sector jobs that are taxing the private sector, okay? Nakora Jork 888 says, hi Mike, 2 days ago, former Reserve Bank of Australia board advisor Professor Warwick McKibben said RBA needs to lift the interest rates now in case there's an external shock. That's correct. I have the article. It's actually coming up right now. It's coming up in a few articles down the road with Australia discussion. I got this in today's show. And also, Australia is now preparing or buffering by raising interest rates. Raising interest rates is very healthy for the economy. It's bad for the consumer and spenders and people like that. And in businesses, it gets tougher, you know. But you know what? It's better for the economy because it hedges against... it protects against inflation, right? But not only protects against inflation, who cares about that, is that it brings markets back in track because they're just blowing hot air. When you're blowing hot air, guess what happens? The black swan will come down, just like that article I read. Okay, so, God, here we go. Oakville is the best place to live in Canada, Kevin Thompson said. Kevin Thompson said Canada's for the rich. Yeah, Oakville, Ontario. My dad's family actually lives there. He's got a couple of sisters and brothers there. Walking Journey. Hello, Mike Martins. Walking Journey, 2-time world champion on the channel here. George Pereira says they talked about it on CTV today. That's correct. I did read the article 2 days ago that Oakville is rated as one of the best Canadian cities. Kevin Thompson said, my buddy has $380K HELOC. He lends out and makes 70K a year off it. Whoa. Kevin Thompson's in the comments today, guys. George Pereira, what do you think about the auto sector tariffs? Do you think it will happen? It has to happen. Because it's about time that the United States of America starts producing and manufacturing things within their own country and start tariffing everybody around them. What Donald Trump is doing, and everyone might be against me for this, he needs to lay tariffs on everything he can. You know why? Because it creates jobs in America. It creates the Canadian economy the American economy will explode. Believe it or not, it will. And not only that, if he tariffs the crap out of everybody in the world, everything gets made in-house, wages start to adjust to allow people to work in these newer sectors that are being developed in America. And more new job sectors are popping up everywhere in the United States. And a lot of the steel companies, a lot of them are moving back to Illinois, to Pittsburgh, you know, and they're getting back into this, you know what I'm saying? Hopefully the brewing companies, I hope they work on getting the beer get made there, you know what I'm saying? I know that I think Budweiser's still made in South Africa, and I think it'd be better if it was made in America because of what's happening with the whole farmers being evicted off their land in South Africa. Maybe Budweiser should make a move if they're still making beer there and move back to Milwaukee. I think they were based out of Milwaukee. So Walking Journey says 2.49 a gallon of gas in Conroe, Texas, $1.98 for a gallon of milk, $1.29 for a dozen eggs. Ooh, gorgeous women. Dozen eggs. Also just paid $3.49 for a pound of Monterey cheese. My light bill is $123. So Kevin Thompson said auto tariff coming in September. It has to. Donald Trump wants to basically build his country. He doesn't want to be dependent on other countries and buy stuff on cents to the dollar and lose its jobs within its own country and give its jobs away. And let him tariff the crap out of everything. You're going to see the American economy keep going up. You're going to see the American economy grow, okay, in different sectors that we haven't in Canada in like at least 50 years, till post-war. I mean, 50 years, we haven't grown in those sectors America's growing in right now. Give it another year, you're going to see us having to raise rates 5, 6, 7, 8, 9 times because we'll have such a failing dollar. So would Australia. Australia's dollar would be so failing, you know, Australia's dollar is failing today. I don't know if you guys saw the Australian dollar today in the markets. Sorry guys, it's hot in here. It's 35 degrees. Okay, the housing market. So someone's commenting here. Let me get back here. Sorry guys. Sorry for these interruptions. Okay, it says here. Okay, Kevin Thompson says the housing market needs some sort of a shock, some major event to bring it down. No, it's not even going to be a major event. It's what's happening is it's already doing it to itself. So there's an article I'm going to read for you guys up here later on in the show that talks about that. And remind me, it's called "It's Not Stress Testing Canadian Real Estate Buyers. The Credit Cycle is Breaking Down." That's what's happening, guys. The credit cycle, the roller coaster of a ride that's been going on, it can't sustain itself anymore. So we're going to get to that a little bit later in the show, okay? So Canada's economy grew. Woo! Woo! Anyways, let's keep going. Walking Journey says, believe me, food is expensive here in the United States. George Pryor says, but people say Canada will crash if the auto sector leaves. Oh no, Canada won't crash if the auto sector leaves. Its GDP isn't going to be as strong. It's going to lay off a lot of jobs because the auto sector is a private employer. It's a private sector. It's not a public sector job. Because it is a private sector job, it's going to be hard to tax those people from their wages to help fund the country, if you want to put it that way, to make it easier to explain. Then Buddy says the housing market needs... Okay, I read that. If everything Mike says comes true, hyperinflation will not be a dream. Guys, hyperinflation is a nightmare. And hyperinflation has happened. Let's go back to my Zimbabwe, $100 trillion. And I think that happened within a span of 5 months in Zimbabwe. The average price of a Coca-Cola in Zimbabwe was $1 Zimbabwe dollar. And I think it reached $16 trillion for a Coca-Cola in Zimbabwe within a matter of a few months. So that's that. That's hyperinflation, and it's happened, and it will happen if we do not tame the inflation beast. So I need to know, is Canada's, because, you know, I'm delusional Mike, right? Canada's economy rebounds. Is Canada's economy really rebounding? So we'll get into some more specific numbers in the future. We're just talking about rate hikes right now in today's show, because rate hikes everywhere. Oh, what fun it is to raise interest rates everywhere. Interest rates keep going up. Woo! Okay. Kevin Thompson said GDP goes up and they have to raise interest rates. Not necessarily. They not necessarily have to raise interest rates if the GDP goes up. They're two. They're almost in one entity, but they're not. So they do not need to raise interest rates. It's not necessarily. Dammer says, "Where's Canada's Trump?" Canada doesn't have one right now, and Canada needs someone to start putting tariffs on everything too, to start growing its own economy. Because we have the people, we have the manpower, we have a huge amount of unemployment that would love to get a job. We have huge amount of resources we'd like to use and contribute. They keep playing this green card on us. Green, oh green. And you know what? There's more trees on Earth than there were 100 years ago. You know, and without having cars on the road, how are the trees going to breathe if there's no cars? You know, because the carbon monoxide, the trees take that in and give us back oxygen. You know, I don't know. I'm not a scientist, but I think that's how it works. But, I mean, yeah. So, okay, here we go. Oil and gas are starting to get busy again, and those boys know how to spend money equals inflation. Kevin Thompson says 100 trillion. Prime rate, most banks, is 3.7. Then Metal Gear Mark III says, we have a huge worldwide pension crisis. Oh, yeah, that's just getting... The people after World War II were promised all these pensions and everything. So people in the 60s, 70s, 80s went into jobs with benefits packages and benefits up until the early 90s. Now they started to get rid of unions and started getting rid of pensions and kind of scrubbing it. So I think people born after 1997 won't be getting a pension. I don't think they will. So if you're born after 97, I don't think you will qualify for a pension anymore. So I'm sorry if you're that young and watching this show. So, Kevin Thompson said a lot of people were signed up for 2% for the 5 years. And then Jason said, that is true, Mike. Walking Journey is right, I think. The control media, this is the fact. Okay, Jason Media is cutting out fake news, I think. I'm not sure who that is. And Sean is saying, hey, Mike, looking for advice. Me and my wife are forced to leave a rental due to parents coming over, Chinese parents coming over. So we are getting a pre-approved, would you buy right now? Our work won't let us leave Vancouver. Oof. Oh, my God. You know what? You know, buddy, you see, I'm not a financial advisor because I can't read. I don't recommend to buy nothing right now. I just recommend to stay on the sidelines and see what's going to happen. Speaking of that, speaking of thank yous or advice, I had a lot of people write me a lot of emails. A lot of people want to meet me and come by the shop. There's a lot of people from Australia said if they visit Canada, they're going to come and make sure they visit me at the shop or where I'm at because they want to meet me. And then a lot of people were telling me that they did not buy. A lot of people were in this in 2017 and 2016, this craziness, and they sat back, took some advice. I said, you know, even though I'm not a financial advisor, they kind of thought over, you know, what the decision was that we're going to make and really thought about it and realized. And now, as time went by and them watching me to today, they're saying, wow, Mike, you know, we'd be in so much trouble right now if we bought. One lady wrote me a letter saying, if we bought when we're thinking in early 2017, right now, my husband had an injury and we would be in foreclosure right now. I want to thank you for kicking sense into us. Then another guy from New Zealand said, oh my God, Mike, I was going to buy in late 2017. I'm so happy I didn't buy. Prices are still going down. I'd be underwater today. There's so many emails from people. So, Steve the Plumber's in the comment section, 2-time world champion. Kevin Thompson says, hey, Steve the Bully. And then Opa saying, I'm waiting until you tell me to buy, Mike. Well, don't wait on me. You know what I'm saying? I mean, take your time, research, do your research. See what's happening in your area. See what's happening in your markets. See what's happening with the banks. See what's happening with lending restrictions. See what's happening with the area you want to move to. You got to do a lot of research, guys, you know. Kevin Thompson says, nice stuff you were saying last week. And then Walking Journey says, leave the job and Vancouver. I just quit the job I hate with 5 children to feed, so you can at least leave the rat trap. That's true. That's true. That's true. You could leave, you know. I had a really lucrative business in downtown Vancouver. I sold it. I'm like, you know what? I could walk away ahead in this right now. You know, I could get myself into a really good position for me and my children and my family for the rest of our lives. We could actually have a place we can call home. You know what I'm saying? So, any news on financing you were looking to get? Kevin Thompson said, bad time to buy. Then Kevin Thompson said, I hope you get in the market. Steve the Plumber says, Kevin, the market is continuing to decline. Walking Journey says, hello, Steve the Plumber. Okay, so let's get to the next article here, guys, in tonight's show. U.S. interest rates are zipping higher, but don't blame the Fed. Okay, these are all point form notes here, so I'm just going to actually read this little section here. It's very important. U.S. interest rates are moving higher because the U.S. government is expected to take more longer-term debt, and global central banks are stepping back from some easy policies adopting in the financial crisis. The widely watched 10-year benchmark Treasury yield jumped through 3% for the first time since June 13, on a combination of factors, including a stronger ADP, jobs data, and announcement of the Treasury borrowing needs and signs of Bank of Japan may be tweaking its policy. The Fed, meanwhile, was meeting Wednesday and was not expected to take action, but analysis expected the 10-year to remain on an upward trajectory at least Friday's government jobs report. Let's see how long this thing is. Oh, it's 6 minutes. No, we're not watching this for 6 minutes.
U.S. 10-year Treasury yield hitting 3% for the first time since...
So that's a really good Treasury yield. I mean, does it hedge inflation? Is inflation at 2-3%? I think it's better than those mutual funds and all that crap that people buy, or GIC crap and all that stuff. Walking Journey is asking me, Mike, can people get a lock rate in Canada? Oh yeah, you can get a lock rate in Canada. You can get a 4-year term, a 5-year term, a 6-year term. And the United States, Walking Journey, they call it an ARM. That's what you guys call it there. I think rates will continue to go up at least 1% a year for the next 5 years, says Kevin Thompson. Steve the Plumber says, absolutely correct, correct, Bud. Currently, people are freaking out with what the media has now started to say about rates and inflation in Canada. Then Percy is saying, we all here in the U.S. got used to very low interest rates, which is supposed to be around 6 to 6.5. That is correct, the mundo. My man Anon is in the comment section from down under. Anon, buddy, you're gonna have to email me your phone number, because what we're gonna do is you're gonna have to get Skype, and we're gonna have to get you on the show from down under. And I need to know what's happening on the ground there in Australia. I'm going off media reports, news media reports that are heavily, you know, kind of cleaned up, so it doesn't get to, you know, what's really happening. You know what I'm saying? So U.S. interest rates are zipping higher, but don't blame the Fed. U.S. Treasury rates are moving higher, so I just wanted to throw that in there really quick. And 3% is okay. It's not, like, amazing, but it's at least at inflation level. It's at par with inflation. So you're not losing money if you have it saved in there. It's just there. You know what I'm saying? So Kevin Thompson saying, the banks are stealing from people. They created the money by offering low rates. Now people are locked in and are going to steal by raising rates. Yeah. That's what I've been telling you guys for the last friggin' 7 years. Fed holds interest rates steady, clears way for hike in September despite escalating tariff fights. So the United States really wants to hedge against the next crash. The United States of America wants to create a buffer zone to protect itself for the next crash. They know it's coming. Do you honestly think these guys don't know what they're doing in this administration? They know what they're doing here. They want to protect against this next crash. Now, okay, they're doing the right thing. They're protecting. Let's go back to grassroots here. Let's go back to grassroots. Right here. The reality is the U.S. Federal Reserve may do greater harm to the economy by waiting longer to raise interest rates. This is a beautiful piece here. I read it at the beginning of the show. If you tune into the beginning of the show and see what this says, this is phenomenal. Okay? I needed to get that out there. It's very important. So, what's going to happen is Trump's going to tariff the world, and it's going to create jobs in America. Plain and simple. Once you start putting tariffs and sanctions on all the countries and putting tariffs and making sure people, making it harder for people to order from outside, guess what? They buy in-house. They buy from home. Do you remember that huge automotive campaign they launched during the Reagan administration where Detroit was losing sales? Detroit Automotive was losing sales to Japanese cars and Korean cars. Do you remember that, guys? And there was a bumper sticker floating around, even in Canada, buy a car from your brother and keep him employed. That was a huge thing. And that's what they're doing right now on a grander scale right now in the U.S. You just don't see it like that. You see it as Trump terrifying everything. Trump's bringing honeybee production back instead of getting that fake honey from Asia to come in and all sugars and stuff. Trump is working on getting steel companies in Pittsburgh reopened. So I'm telling you what's really happening here, people, you know? Okay. Okay, someone's asking a question here. Mike, I had a quick question about our economy under Trump. Is this a solid economy, or is it just an economy that looks good on the surface but underneath is crap? No. No. It's somewhat of you got 12 feet to work with. The first 3 feet are solid as rock. They're working to get to the bottom of it. The last administration, if you look at what happened in the last administration of 8 years, completely destroyed the American exports, completely sold our jobs out, completely sold their jobs out. Sorry, I'm not American. Completely ruined everything for everybody. And then you had Obamacare, which ruined everything. And people paying these fines every year because they don't want to sign up for it. It was a nightmare. So what happened was they started fixing things. And they started they're fixing NAFTA. They're fixing all these deals where America is getting the short end of the stick. Right now, of the 12 feet of crap, the U.S. is right now 3 feet down. Once U.S. raises rates a bit and keeps inflation under check, you're going to see it go down another 3 feet. And once you start to see all the tariffs start kicking in and taking place, you're going to see more jobs opening in the U.S., another 3 feet. And then you're going to see United States back into 1961, 1962, and 1963 territory by another 3 to 5 years if they continue on this trend. 1961, 62, 63 territory. So by then, 5 years, they should be getting rid of the Fed by then, the Federal Reserve. By then, I think they could fix that problem. So Jason said out of a job yet. Keep buying foreign is what the sticker said here in Windsor. Really? And then Kevin Thompson, I bought a GM car. Me too. I have a Chrysler. My car was made in Pennsylvania. Kevin Thompson says, GMC trucks only. And then the Don says, I've heard that the crash could be so bad that the government nationalizes the entire real estate market and sets housing prices that could be pure socialism. Well, yeah. You know what? Yeah. You're right on the ball with that. That could happen. Oh, wow. Yeah. And then Manawa says, how's it going? Doing good. Jason said about GM. And then Redbot says, I'm a cheeky booger. And Persia says, I appreciate your inputs. 755 in the comments. Trump is going to save USA and the world. Really? He's not going to save the world. He's just going to put tariffs on everything and create, like maybe, I don't know how to say this, but make it right for his people, if that makes sense to you guys. You know what I'm saying? I'm not talking about anti-Trump this and that and oh, this and that and what the MSNBC is saying and CNN. I'm talking about numbers and fact and fiction. America is going to start... one thing I agree with is the whole Trump basically tariffing everything because it's just going to create more jobs in his own country. That's all he's doing with that. You know what I'm saying? So there's a message deleted here. Did someone tell me off? I guess someone told me off in the comment section. Oh, Red Robot called me a homo. Homo? Yeah. So, yeah, there's a lot of people out there that just like to use weight, or anything they can to make fun of somebody, which is, you know, and it's usually the people that have nothing going on their lives. I'm just going to ban these people from the channel. Yeah, I'm just going to ban these people. If people want to be smarty pants on my channel, I don't care. I don't need you here. Someone's asking me, what do I think of the Kelowna mayor? Don't know the Kelowna mayor yet. But, yeah. And, okay, comment section's going crazy here. And then someone says, oh, Trump will save the world. Already has in some way. He will wake up before the libs destroy it. And someone said it's a Russian bot. Mike the Man. And Steve the Plumber. Mike Martins. And, okay, guys. So, this is a really important article. So, guys, let me get to this, okay? Feds hold interest rates steady, clear ways for hike in September despite escalating tariff fights. Washington escalating U.S. trade fights with other countries aren't throwing the Federal Reserve off its course, gradually rising interest rates as the economy strengthens. At least not yet. The Fed held interest rates steady on Wednesday, but upgrades its economic outlook and downplayed by the trade skirmishes, clearing the way for rate increases in September and possibly another at year end. So they're looking at 2 more rate hikes. I think 3 more rate hikes might do the trick, but let's see. The central bank's policymaking committee kept its benchmark short-term rate at a range of 1.75% of 2%. In a statement after a 2-day meeting, Fed officials described the economic growth as strong and didn't mention the trade conflicts, a signal they're strickening to their latest forecast of 2 more quarter-point rate hikes this year. Fed futures market foresee a 91% chance of rate increase in September and a 65% odds for another move in December. Fed policymakers have already bumped up key rate in March and June, capping a total of 7 increases since 2015, after sales rates stayed at near zero for years following the 2008 financial crisis recession. The increases are rising the costs of credit, card debt, adjustable rate mortgages, and modestly lifting banks' CD rates. In the testimony before Congress recently, Fed Chairman Jerome Powell acknowledged that U.S. tariffs on imported steel, aluminum, and other products, along with tit-for-tat duties by other countries, are crimping the business investment. He said that they would hurt economic growth if they don't ultimately lead negotiations and lower tariffs. But he added it's early to predict the outcome. And rather than note the risks of growth posed by trade standoffs, Fed policymakers continue to describe risks to their outlook as appearing roughly balanced and reiterated they plan to raise rates gradually. President Trump recently took the unusual step of criticizing the Fed rate hikes, which could lead to additional scrutiny in the Fed speeds up or slows down its anticipated pace of increases. So, really good article if you guys want to read the whole thing. Here it is. It's called Fed Holds Interest Rates Steady. Let's move on. Money markets, from Reuters. Thanks for joining me, guys. Trends in the housing market, Mike Martins. What's today's date? I gotta announce the date. Today is it's the 1st of July. Sorry, 1st of August. Oh my God, I'm getting married next month. 7:22 p.m. local time. 11:22 p.m. Toronto time, and like 3 o'clock in the morning London time. Okay, let's go here. Okay, so there's a lot of stuff here. Grasshopper saying this mayor wants the zone for Airbnb for offshore money. So that's probably the mayor of Kelowna he was talking about. Ebank says, will prices in Vancouver ever get back to reality or just a correction, 10 to 20%? A house in Vancouver in reality is only worth $400K for what you get. So many of them are dumps. Yes! Yes! I love this guy. Dude, I don't know who you are. Dude, I love you, man. I love this guy. That's what I've been saying. Bang for your buck. $1.2 million for that? Do you know what you could buy in West Palm Beach for $1.2 million? You'll get a helicopter pad behind your house, like far enough away. 2 tennis courts. A swimming pool, indoor and outdoor, and you'll receive... you'll live on the intercoastal, so you could park your boat on the water and go out from your backyard on your boat, take the intercoastal and head to the ocean. 400, yeah, thank you, Ebenq. Thank you so much for that. I really appreciate that comment right there, because that's exactly what I've been saying for the last 7 years. So, someone's asking me about, what was this? Thoughts and still, hey Mike, are your thoughts still the same on Princeton, PC? Well, I don't know what I said about Princeton, but it's a small town. It has room to grow. I can tell you that right now. I've been there twice. Okay. So I'm just going through here. I'm just kind of weeding through these articles here. I mean, weeding through these comments before I get to the next article. Grasshopper says, his buddy was fighting now. Okay, that's something else. Okay, Bankyuk says, I bought 4 houses in Japan for less than $400,000. $400,000, but way better value. No, I believe it. I believe it. Anthony D says, $1 million should get you a mansion, Mike, right? Yeah. $1 million should get you a farm, an estate, a plantation. A lot of swearing in the comment section, guys. Okay, it's Miro. It's saying the housing crisis in New Zealand is effed up. Yeah, buddy, I know. I'm with you. I'm with you, buddy, on this. Just calm down. Calm down. So, here we go. Tired of the tent city going on because of the housing all over Vancouver Island. Kevin Thompson said, I was there and they did all the his office in marble. I'm not sure what they're talking about. Okay, guys, let's move on here. Let's get to the next article I want to read. Money markets traders, 2 more U.S. rate hikes after Fed meeting. Okay, this is the exact same thing I just read, guys. It's going into where things are going to be headed. Very important, guys, that we follow what's happening in the United States of America, because it creates a ripple effect for the rest of the world. China will lose to trade wars with the U.S. China, you guys have no idea. China will not win. So I think what's going to happen is China's going to have to play its trump card. It's going to have to play something. It will not win. Never against the U.S. I'm not just trying to say that because I live close to the U.S. I speak the same language as Americans do. I'm of the same major religion of what they have. We're of the same kind of breed. No, I'm not saying that because of that. China will never win. They could never, ever. Okay. It's all linked to greed. Techman007 channel saying it's all linked to greed. Employers underpaying, no jobs, no housing. It's all artificial. In the newspapers, it says foreigners are laughing at us and as they take our future away. Yes, I did read an article about them selling condos in China before they reach before they even get advertised to Canadians. And if a Canadian wants to buy a condo, they need to go to Hong Kong to buy it. If a Canadian wants to buy a condo in Vancouver, they need to go to Hong Kong to go to the sales shows there to see the displays of the condos. Okay. Opa saying, are there any condos in Merritt? Yeah, they're building some low-rise condos here. And I think they're actually scheduled to build more. And rate hike in September. And Belinda's in the comment section, my friend from South Florida, just sending a hello mic and an ear dropping. Oh, here's Antonio. See, guys, this is the real reason I left the big city. Because I want a stable place for my children to be raised. I don't want to raise my children in a congested, heavy trafficked, everybody mad city. And I don't want to deal with that, you know what I'm saying? So, the Reuters article here. Money markets, traders see 2 more U.S. rate hikes. We're going to skip that because we just read that. Okay, what's going on in the world of Australia, guys? Australia is another nail in the coffin in this global housing economic.
Go down.
Okay, sweetheart. Don't bish. Don't bish. Okay, fecha a porta, okay? Yeah, fecha a porta. So that's Antonio. Okay. So, someone saying, any idea on the price of Merritt condos? I think they start at $150. Because the average benchmark price for a house in Merritt is around $225. So you could get a condo for like $100,000 here, maybe. Maybe. I'm not sure. I'm not sure, guys. So you got to kind of look. You got to look in on yourself. Everyone just joining the channel right now, guys. So someone's saying 275,000 average. So that's pretty high for a condo because I paid $260 for my house so last year. So yeah. Okay. Anyways. So, guys, Australia is so important. New Zealand is so important. You guys have no idea how important these countries are when it comes to solving or rectifying or fixing this global economy. And it's every English-speaking country. I have a friend, boots on the ground, Marcus, down in Jamaica. And he's been watching my channel for about 4 years now. And surprisingly enough, I think I actually met him when I was in Jamaica before he started watching my channel, like 10 years ago. I think I actually know who this man is. I see him sometimes on YouTube too. And talking about the Jamaican crisis, where the Jamaicans basically sold their entire country out. They sold out their airport. They don't even own their airport. They don't even own any other highways in Jamaica. They don't even own anything. The Jamaicans don't own anything in their own country. And they sold out to the highest bidders. And look what's happened to Jamaica is phenomenal. I watched some of this guy's work before it gets taken down, of course. And it is it's depressing. And now auto insurance companies now are foreign owned in Jamaica. Some auto insurance companies and electric companies are foreign owned. So the Jamaican proper has nothing. You know? Walking and Journey says condominiums are a scam. Stay away. They're just like houses in subdivisions. Yeah, it's that whole strata thing that doesn't sit well with me. A lot of people are like, yeah, strata's good, man. Yeah, a pipe breaks. We'll get somebody there next week. Don't worry. Somebody comes in. Woo! Okay, Canada sold out as well as the biggest toll highway in Canada. It's owned by Canadian. Tim Hortons isn't even Canadian, and neither is Molson Canadian Beer. Okay, so we got here Australian media. Mr. Paul Tubes, Australian media is in denial about the housing crash, Mike. Only now they are starting to admit that we're heading for a fall in Sydney and Melbourne starting to crash. Dude, I don't know when you tuned into my channel originally. I've been talking about Australia. It's so bad in Australia that police officers, lawyers, doctors, anyone that's a public servant that works for the government that's needed in those positions to help keep the infrastructure going so people don't die on the streets and don't die in hospital beds because there's no doctor to see them. Those people can't afford to live in Sydney. So being a doctor maybe isn't the greatest money-making way. I think maybe selling homes or something is a good way to make money, you know what I mean? But oh, guys, the comments are going nuts right now. I need people from Australia. I need some of them to call me. A lot of them email me, guys. You're going to have to start email me your phone number with country code and state the whole code with the 011 or whatever it is. You got to give me your full phone number. We have to start calling people in Australia and New Zealand to find out what's going on. Someone said, man, did you answer my question? Okay, Burger King is gross. Okay. There's so much going on here in these comments. I'm going to move on. Very high chance of an interest rate raise next month. So, Australia, once again. Oh, this is from the future. This is from July 3rd. At 3 o'clock in the evening. In the evening, yeah. In the afternoon, sorry. So, yeah, that's... Oh, this is an old one. Oh, sorry, guys. Sorry, it's an old article. Oh, I know why. Okay. I know why I did this. Okay, let me do this. Let me do this. Let me close the door here. Hold on. Oh. Okay, sorry, I had to close the door there. I'm sweating like a dog, guys. It's like 35 degrees in here, centigrade. Okay, very high chance interest rates to rise next month. Okay, now let me explain to you why I'm reading an article from a month ago. There's a reason why. It ties into the next article, okay? Today, the Reserve Bank decided to leave interest unchanged and a record low of 1.5%. It's historical low, actually. Very few, if any, economists were expecting the bank to do anything different. The Reserve Bank is between a rock and a hard place, AMP Capital's chief economist Shane Oliver said. He's right. If the Reserve Bank lowered interest rates, most believe that the banks would pass on that to borrowers. Of course. It would also give banks less firepower should real crisis come along. So they're not buffering for this, okay? And if Reserve Bank raised rates to help prepare borrowers for the future, steeper rate rises, as some have suggested recently, it risks stalling economic growth. That's because despite the robust infrastructure spending, stronger businesses, investments, and particularly healthy export sector, it's the consumers that causing the anxiety among policymakers. So if you bought a home and interest rates go up and your payment goes up when you have to renew your mortgage, let's say by $200 a month, a lot of people will be underwater. And Dale Cunningham's in the comments. Dale, you're gonna have to give me Email me. I got my email. Email me or contact me on Facebook, buddy. Everyone, you could contact me on Facebook. I really want people from down under to send me their phone number, something, or Skype. I wanna call you guys down under. I want to get some more, because what I'm always reading these fabricated, very, very polished articles that's not giving me the truth. And Dale is saying, Australian media is saying all is good and another bull run to begin. Woo! 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 Okay, so this is last month's article from Australia. Now, let me get to my point. Before I go there, if you're just tuning in, let's get back to this. This article I read. Now, the reality is the U.S. Federal Reserve may do greater harm to the economy by waiting longer to raise interest rates. So, guys, I'm bringing this up like over and over again because if Australia does not raise interest rates sooner than later, it's going to damage and cripple its economy even more. The U.S. is going to keep raising rates. It's buffering a crash. It's preparing for a crash. Mind you, the average median household price in the United States benchmark across the board is $225, maybe $260. High benchmark across the board. So it's still within affordability range for most Americans, right? So okay. Okay. Steve the plumber and Walking Journey, did you guys see that article, the Globe and Mail, regarding peer pressure to buy peer pressure. It's like chanting USA, you know what I'm saying? But, yeah. Let's get to my point here, guys. I'm talking too much. Now, let's tie into the article here. Very high chance of interest rates next month from July 3rd. Boom. Yesterday's article. Moody's, falling Australian dollar could trigger RBA rate hike. Why? They're not raising rates. Dollar deflates. Becomes less attractive. It becomes a problem. They're not hedging. They're not preparing for a crash. Australia is in a huge disaster zone right now because they're not hedging against the crash. And if you want to believe delusional Mike, you can. But if you want to believe the respectful, tie-wearing real estate agents and tie-wearing, media hosts and news anchors that look so perfect and properly trimmed, probably have 6-7 credit cards going on, you know what I'm saying? This needs to be done. So, Dale Cunningham saying, every time the U.S. raises rates and Australia doesn't, our dollar weakens, so the cost of living increases. Can't win either way. And, yeah, this is what's happening. This is inflation hits, and we're going to get back to this. I'm going to bring this up every couple of times as I do the show. There's hyperinflation in Zimbabwe. There's the $100 trillion bill. Ooh, is that $500 trillion? Oh, no, that's $50 billion. Yeah, that's $50 billion. That's from 2008. That's nice, you know? And what's this one? $200 million. That's a lot of money, man. I like this one. $100 trillion. That's what's going to happen, people. You think I'm kidding? Okay, let's get back to the article I needed to talk about. Moody's, falling Australian dollar could trigger RBA rate hike. Debt-laden Australian households are at risk with higher interest rates, with the Reserve Bank under pressure to lift the cash rate sooner than market expectation. Ratings agency Moody's has warned. Moody's said ongoing falls in the value of the Australian dollar against the US dollar could force the RBA to lift the cash rate, the rate of banks charge for each other for overnight borrowing. This is despite the market consensus that the rate would likely be on hold for a record low of 1.5% for some time in the foreseeable future. Do you understand? You can't do that. Historically, record low interest rates for too long into the foreseeable future will create What are they hedging? Is Australia buying gold, guys? Is Australia buying tons of gold that I do not know about? Are they buying 1,000 tons of gold? 6,000 tons of gold that we don't know about? Metric tons? Is Australia creating 800,000 private sector jobs that we don't know about? Because I'm in Canada. Maybe they are creating 800,000 private sector jobs to tax the middle class, so the middle class could spend. This is a nightmare. Okay. Cash rate increases could lenders lifting borrowers' home loans interest rates to make debt less affordable in highly leveraged households, Moody's report released this week said. Australian households are vulnerable to tightening of monetary policy that is more rapid than we are currently expect. The report authors Alistair Lim and Jean Fang said, Mr. Lim and Mr. Fang said that the local currency had fallen more than 5 points against the US dollar since the start of 2018, and warned sustained currency depreciation could lead Australia losing its current AAA credit rating. I don't care what it is, AAA plus. Other countries that are paying down their debt and have normal interest rates have B and C and D credit ratings, but you know what? People aren't starving right now like they are in Australia. Why aren't they starving so much in Australia? Because they're living off their equity. And they're buying off their equity. Now that's come to an end. Australia's household debt as a share of disposable income is among the highest levels for AAA negative rated countries, have risen from 180% 3 years ago to 200% in March this year, the report said. In a scenario of faster interest rates increasing, household debt affordability would weaken further and more quickly, cooling consumption and GDP growth. If depreciating Australian dollar curbed investors' appetite for local assets, it would also rise external vulnerability risks. Thank you! Moody's provisional forecast of the big four banks to follow the string of other lenders, including Marquet AMP, Bank of Queensland, in lifting home loan interest rates to counter the increasing wholesale funding costs. So far, the big four have held off from lifting home loan rates, and instead Commonwealth Bank cut interest rates by 0.10 percentage points across the number of its fixed home loan products on Monday in an unexpected move. So now, this bank right here, Commonwealth Bank, is taking a loss on its lending to try and attract more customers. They're taking a loss on lending. That's a bad move. That's a really bad move. But hey, you know what? What can you tell these people, right? There is no doubt that the leverage of Australian households to household debt is one of the Reserve Bank's major concerns, and it wants to see a buffer from wage inflation before home loan rates start rising broadly. Wage inflation? He said that 1% increase would do a $220 a month to $400,000 month mortgage repayment. Recent borrowers have not had time to build up enough margin in spite of current level low rates. Okay. I'm not sure. Somebody's commenting on a video here. Let's see if it's a housing video. Oh no, it's one of my video game videos. Oh yeah, that guy makes sense there, guys. Guys, sorry, I do video game reviews too. There's my fat face. I do video game reviews too. And should leave links below to some of the stuff I'm talking about. Anyways, so that's what's happening right here. So, hey, you know, interest rates next month. Boom, look what's happening. Eubank, discount offer. So there's some advertising down here. Here's rate comparison rate. So, yeah. Small banks could pave the way for big four rate hikes, says Moody's. Again, Sydney Herald. Jacking rates. Of course, there's going to be a ton of political backlash. That's what they're talking about here. And other banks will follow in footsteps. And that's what's going to happen, guys. especially with Commonwealth lowering rates unexpectedly. Bad move. I think it's a bad move, but what do I know? I'm not an economist, guys. I can't even read. I got a grade 6 reading level. Okay. Let's look at some of the comments here. The local proper are getting clubbed like baby seals. Yep. Steve the plumber says, okay, thanks, Kevin. Kevin Thompson says, people have less money because they have to pay more interest. Yeah. Okay, let's keep going here. Walking Journey, Mike, can you please get Gerald Celente to come on to your show one day, either by phone or in person? I don't think he would want to. I'm a small fry in this thing. I look at Gerald Celente as like my mentor, like somebody that I look at for advice with stock trading and understanding the gold and spot gold market and oil markets and stuff like that. People like that will never want to come. You know, I don't have a big base. I don't have a huge following. You know, so people like Gerald Celente, Peter Schiff, all those guys are way up there. Those guys are big power hitters. Those guys really understand markets and discussing markets and trends in the markets for at least 30, 40 years, the last 30, 40 years. I think the Trends Journal by Gerald Celente has been out. I think I've read a couple of interesting issues of the Trends Journal through Gerald Celente, copies of it. It's been out, I think, it's been out since, I think, 2001 or 2000, if I'm not mistaken. And, you know, so someone's saying here, Mike for Kelowna Mayor 2018. I don't think I could run for mayor there because I'm not, I don't live in Kelowna. So back to the comments here. West Kelowna Mayor post is up too. This is your calling, Mike. Kevin Thompson said, my buddy makes 70K per year off his 150,000 HELOC. Kevin Thompson's got some really good financial discussion ideas. Kevin Thompson, just go to my Facebook page. If you go to the top of my channel, you'll see a Facebook link there. Go to that, click on it, and I need your phone number because we need to discuss how you're making this 20-30% return. Metal Gear. Okay, so okay. Where was I? Mike Martin's ex-wife. Hello, honey. I don't know who that is. That's just a troll account. I know who Mike Martin's ex-wife is. It's FU. FU is, again, you know, in the comments. You know what I'm saying? Dylan Lopez is saying no one's talking about the July stats. Go ahead and send me a link to it. We'll talk about it here. I'm just talking about raising interest rates all across the board in every English-speaking country. A lot of countries are going to be losing their sovereignty soon. Because we're losing what it means to be Canadian, what it means to be New Zealander, what it means to be an Australian. Walkie Journey says, I saw Gerald Celente hosting InfoWars the other day. Yeah, for sure. For sure. Those guys are big power players, you know what I'm saying? Alright, let's keep going. Interest.co.New Zealand US Fed signals next rate hike. So how does this... Okay, this is how it affects. Australian sense of house price declines. US Treasury 10-year, 3%. So, like, again, 3% is cute. If you want, it's nice, it's sweet, but it's right at inflation mark, 3%. So you're not hitting, you're not missing your money. You're not losing money. You're just your money's there at 3%. That's what I think. You know what I'm saying? So let's see what's happening. Here's a summary of key events overnight that affect New Zealand with its new U.S.-China trade tensions. So we got to see this, guys. Let's take a look and see what this guy has to say here. This might be important.
Hello, I'm David Cheston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock. With news, the US-China trade tensions are rising. Firstly, however, the US Federal Reserve held short-term interest rates steady today and offered an upbeat assessment of the economy's performance, suggesting another rate hike increase is likely at its next meeting. That upbeat assessment was reinforced by data released by ADP in the ADP employment survey, a precursor to the upcoming non-farm payrolls report this weekend. That showed a rise of 219,000 new jobs, the highest since February. There are also two separate American PMI surveys released overnight for July. Both show the expansion at a high level but slowing. Major American car makers have reported lower new vehicle sales for July from steep declines in passenger cars. The American government's need for new debt is rising. Today they said they will raise the amount of long-term debt it sells to $78 billion this quarter, the highest since the same period in 2010. And the US administration is now expected to announce beefier 25% tariffs on the proposed $200 billion of imports from China, up from the original 10%, pressing harder on what it sees as an effective lever on the Chinese. Wall Street has shifted lower on the news despite a banner result from Apple.
Oops, volume's off. Okay, so that's that. Thank you for telling me that. Anthony D says, that old man is boring. You're a lot more entertaining, Mike. Woo! And working on it. Volume's off. Yep, thanks, guys. And Grasshopper says, we're very concerned about our offshore clients. Woo! Who's propping up the economy, people? Is it our middle class? No. See, back in the day, maybe 10 years ago, the middle class was actually driving force of the economy. It's no longer that anymore, people. I don't even know what to tell you what it is anymore. I don't even know how to tell you it is anymore because it's all paper. It's paper cities, followed by paper money and paper wealth, followed by paper thoughts and paper lives with paper cars and paper dreams with paper love. It's all paper. I should become like one of those guys that write poems and sit there and just, you know, a thinker or something. Someone says the middle class is useless now. Yep, that's correct. So verb.org/current statistics. Oh, leave a link. Put a link in there. Bang says, or non-existent. Yeah, middle class has disappeared into the dust. Driving force is now Chinese and Indian real estate investors. Belinda's saying China has ghost cities. Oh, San Francisco. Oh, the feces levels on the sidewalk in San Francisco. You guys have no idea how bad it is in San Francisco. The amount of homelessness, junkies, the crime rate, the murder rate is turning San Francisco into a fourth world. Screw third world. I think it's worse than countries like Panama and like hard parts of Panama. I'm not talking about Panama's bad. Like hard parts of Nicaragua, Venezuela. I think it's, you know, San Francisco is becoming like that, you know, if worse than a lot of those places, you know. And then someone saying the drug situation is bad. And then Metal Gear saying middle class equals most of the taxes. If they are gone, most of the taxes are gone. Yeah, middle class is the driving force of the economy. Pure, plain and simple. There's nothing more to say to it. Without the middle class consuming and producing, okay, in their jobs, whatever they're doing, Our jobs went from construction work, making bricks, blah, blah, blah. Woo! A nice pop-up here. The hottest girls in Merritt looking for experienced guys. Anyways, it keeps giving you, you know, instead of doing that, they move to offices. Now they're working for, people work to move into offices and banking system. And then now people are working in collection offices. That's the work now. There's no more people making bricks anymore because we're buying them for cheaper from China. But then we have people working in collection offices. That's what they do now. Back 20 years ago, you'd work in a brick factory making 40 bucks an hour on union. But a lot of people traded that into working in an office, working for a collections company. Why? Because the brick company got sold off to overseas for cheaper reasons, you know. So, yeah. And then controlling the risk, Steve the Plumber says. Yeah, controlling the risk is very important. You know why? Because controlling the risk is supposed to be done at the banking level, where when the application is taken, the bank is not going to take that risk. You know, 20 years ago, 15 years ago, even 3 years ago, the bank would turn down everybody that walked in there, basically. They shoot them right down. Up until the last 2-3 years, everyone gets approved. Okay, guys, let's get to this article here. New Zealand dollar dips on soft unemployment data. Very important, guys. Very important. The New Zealand dollar fell against the U.S. counterpart along with 2-year bond yields and second quarter unemployment data for underwhelmed. The jobless rate rose to 4.5%, exceeding the 4.4% forecast. Markets are now speculating the RBNZ will implement their next rate hike no sooner than September 2019. Interest rates have pointed to a downward trend in rate hike expectations since April. Indeed, the markets now price the probability of an interest rate hike this year at 0%. Looking ahead, the Kiwi dollar on focus with the Federal Reserve monetary policy. So they're not betting on a rate hike again in New Zealand, which they are due for a rate hike. Okay, so guys, so Grasshopper saying, you think BC would learn its lesson of what happens when you run it like Vancouver? No, obviously not. No. Anon from Australia saying, Australia was sending their recycled trash to China. China extracts the precious metals from it, especially e-waste. They smelt gold and silver bars from e-waste. Yeah, that's true. Old hard drives and electronic crap, and you know. And Kevin Thompson says, I'm on 9th line next to... Okay, so that's in Oakville. Grasshopper says, now Nanaimo and Kelowna are turning into the same druggy, homeless type communities with all these shiny new condos going up, sold as tokens on the world market. And what else is going here? Okay, comments are going nuts here. So this is very important, guys. Let me get to this article here because this is going to affect us all. Because whatever England does, because England is a little bit going 18-20 months into decline in their housing market. They got a little recovery and they're making it seem like they struck gold. No, London has been going down the last 18 consecutive months in property values. Okay. So, Bank of England could surprise markets with more rate hikes in 2019, strategist says. It has to raise rates. Okay, Bank of England could surprise. So here goes. Sorry, guys, I'm just looking at the comments here on the right. The central bank is due to meet Thursday in its toughest likely to deliver a much-anticipated rate hike. Market players have factored in a little bit more than one rate hike over the next 12 months. Bank of England is likely to surprise market players with stronger rate hike path next year, a strategist at JP Morgan Asset Management said Monday. The central bank is due to meet Thursday and is thought likely to deliver a much anticipated rate hike at a time when concerns over Brexit is deepening. So England and the UK is blaming this housing crisis not on affordability levels in the middle class leaving London and moving to middle England. They're actually blaming Brexit on this one. Okay? And the US is blaming Donald Trump. Canada's blaming Donald Trump. No one's blaming the middle class, or not blaming the middle class. We're not focusing on how the middle class is disappearing and turning into working poor. So they're not focusing on the right areas, on what is really happening and why their markets are being driven down. And so England's been blaming it on Brexit forever. So let's keep going. Recent data suggests that the UK economy might be experiencing a temporary slowdown. You don't say? But it's still growing. The manufacturing and service sectors are sounding more positive, and the labor market is still resilient with employment rate as low as 4.2%, which is not too bad. The BOE, Bank of England, must demonstrate that it will look through temporary weakness, Karen Ward, chief market strategist of JP Morgan Asset Management, said via email, adding the rate hike is likely Thursday. The BOE, Bank of England, will also indicate the path of very gradual tightening remains appropriate, she said. Although Brexit remains a big uncertainty as negotiations are far from concluded, Ward said by the end of this year it would be clear that the UK is headed towards a softer Brexit, and the Bank of England will raise rates in 2019 more than market is currently priced. Bank of England should raise, so this is from, yesterday, sorry. Bank of England should hike rates. So here it is, people. It's coming today in England. So today, right now, it's Thursday in England. So we'll see. A softer Brexit means that the UK will keep close trade links between the rest of EU. Wards expect at least 2 central bank rate hikes in 2019. 2019. So it's my family here coming to visit me. My daughter's here. This is my daughter. Yeah, it's my daughter, Julieta. Yeah. Yeah. So I always get family visiting me here in the office. So John Patterson is asking me, hey Mike, thank you for such an informative channel. Appreciate all your great work. Will every type of home be affected from the crash, or will certain types actually go up in value? I think everything's going to have a correction regardless. Land, farms, townhomes, everything is going to have some sort of a correction. Regardless, because you're going to be paying more because interest rates will go up. Here you go, Rain. Okay. Hi. So I get the kids visiting me from time to time here while I'm hanging out here. Someone asked if my kids speak Tagalog. They speak a bit. They speak more Portuguese, actually. Kevin Thompson said, "Is this whole channel is fake?" Yes! This is an illusion. Everything you're seeing here is fake. This stretchy Armani shirt that I took out of the closet today, because I want to kind of look a little bit nice today, but it's so hot, is an illusion. It's not even real. Everything you're looking at here is an illusion. And then, working on it, saying, I think the UK has high unemployment rate. Remember, guys, this is an article written to you know, for people not to get scared, not for investors not to fear the markets, and you know, for people you know, not to worry that everything's going to be okay. But they always want to blame Brexit for everything, which is, it kind of sucks. Every time I read a housing article or raising interest rates or whatever's happening, it's always Brexit. It's like the US blaming Donald Trump. It's like everything they're trying to make, you know, instead of looking at the key issue. You know what I'm saying? So let's move on. Bank of England rate hike would have little impact on house prices nationwide, says. So I really don't... prices keep going down, so I'm not too sure... Oh, this old guy's talking.
We expect that in order to target, recognizing that we expect the economy to move into a situation of excess demand. What the committee has said is that we expect that in order to return inflation sustainably to target, recognizing that we expect the economy to move into a situation of excess demand and inflation still to be above target at the 3-year horizon, that in order to bring it back to target over a more conventional horizon, which means moving it in from that 3-year horizon, that it will be necessary, likely to be necessary, to raise interest rates to a limited degree in a gradual process, but somewhat earlier and to a somewhat greater extent.
Earlier, you know why? To brace for a crash, to create that buffer zone. They want to raise interest rates earlier. He's trying to say it without saying what I want to tell you. If they don't raise interest rates, they have nothing to fall on when the poop hits the fan. Plain and simple. The only country right now that's ahead of the game with this right now is the United States of America with their rate hikes. They're ahead of the game right now. And the rest of the world is going to have to pull up its socks and look sharp, or there's going to be a lot of problems on the horizon. So someone says, that is the guy who screwed Canada after the financial crisis? Yeah. Mark Carney. Yeah, it's always someone else's fault. Grasshopper says condos, townhomes, single homes, all getting slashed here in smashed in Kelowna. Yep. Grasshopper sent me a few articles on my emailed me a few articles about Kelowna housing getting slashed and Kelowna pricing just plummeting right now. Metal Gear Solid asks, what about land? Land will be, everything will be affected. Anything you're borrowing against, you're going to pay more for because interest rates are going to go up. So even if you borrow at really low rates and you buy this land and you're paying almost next to nothing for borrowing the money, you're still going to have to pay for it one way or another. Either rates go up, price of land goes down to offset the rate hike, right? Unless they create 800,000 jobs out of thin air, private sector jobs. Sorry guys, it's like 35 degrees in here. It's really hot. Someone says, I have an investment property in Sydney. Should I sell? Ride it out? I'm a 30-year-old. You're still young. If you want to retire to that property, just hold on to it. I mean, you know, if you want to make money off it, then that's a different story. If you're heavily leveraged against it, that's a different story. If you have a HELOC on it, a second mortgage, that's a different story. You know what I'm saying? Metal Gear Mark 3. Mike, I was going to buy land free and clear. Interest rate should not. Okay, then if you're going to buy free and clear, you're fine. You know, just make sure you know what the land's zoned for. Is it zoned for commercial? Is it zoned for residential? Is it a sanctuary where you can't build anything on it because it's protecting the redbirds or something? Someone's asking me, does it matter if it's cash flow negative? Are we talking about the land? Free and clear? Anyways. Okay, guys, this is the very important article that I really want to read to you guys. This is so important, okay? This is the reason why this hamster cage that we're on Okay, so somebody asked a question. Hold on a second. Does it matter if the cash flow is negative? The guy who has the condo. Yeah, it does matter. If your cash flow is negative and you're already paying, if your cash flow is negative, you're renting it out, I suggest that maybe selling and walking away free and clear if you can cover your nut and get away as you can. If you're already negative and you're in a cash flow negative situation and you're already 10, 20, 30, 40, 50K underwater, I suggest to maybe ride it out because you're still 30. It's a really tough situation. You have to see everything that's going. Everything needs to be put on a board and kind of look at what all the scenarios are. You know what I'm saying? So yeah, so Dylan Lopez is saying 30-year-old wants to hold a condo. Wouldn't do that if it costs him. Yeah, if he's in negative cash flow, I didn't hear the whole question, so it was broken down into different sections. If he's in negative cash flow, then maybe if he could walk away free and clear by just maybe seeing if he could cover his entire nut. I don't know what the situation is. I don't know if he has a second mortgage. I don't know. All kinds of things, you know what I'm saying? We don't know the situation. Is he married? And in Australia, if you're married and you own a property, you got all this other stuff that happens, you know, like when you sell, right? So you got to take all the factors in. So lots of people commenting here. So Mike Martin's ex-wife is in the comments section, guys. So guys, that's just FU. You know FU, guys. I don't know if you know FU, but he's been in the comments quite a bit, actually. Yeah, so everyone, there's a lot of people here in the house from Oakville, Ontario, guys. Lots of people from Oakville, Ontario, so in the comments section. So everyone meeting, a lot of people are meeting up through my channel, which is really nice. People arranging to meet up for beer and stuff and talking about stuff. And speaking of people meeting up, Steve the plumber said he's going to come and visit me here in Merritt, British Columbia sometime next week. So, yeah. Credit cycle. Okay, so let's get to this article, guys. It's not stress testing Canadian real estate buyers. The credit cycle is breaking down. Canadians are slowing their borrowing, especially for real estate. You don't say. Bank of Canada, BOC, numbers show that credit growth continued to slow in July. Growth even reached decade-low levels for real estate lending. The slowing growth is a major sign that Canada's credit is entering a down cycle. Credit cycles, lending, and asset prices. Okay, hopefully regular readers know the basic of credit cycle by now. But here's an intro for you newbies. Credit is determined by borrower's risk, which moves with business and real estate. When home prices are rising, credit is easy since the chances of defaulting on a loan are generally reduced. That's very true. If a borrower can't make their payments in a booming market, they can always list and sell before defaulting, which is exactly what that means. The easy access to credit makes it cheap, especially for things like real estate. That's the basics of the credit up cycle. When businesses and real estate fundamentals begin to deteriorate, we enter the down cycle. Lenders are tighter with lending and a cut down on available credit, or their access to cheap credit becomes tighter. This results in higher lending rates, which drop borrowing even further once credit tightens, consumption and large asset prices begin to adjust to liquidity. The public isn't notified until it's already begun. So that's when everyone gets their crash course, okay? The public isn't notified until it's begun, and then there's some signs to figure out what they're thinking. If lenders could issue credit, they would. If credit growth slows down, it's because they don't have enough qualified demand. That's just a little crash course on credit cycles, lending, and asset prices. Very simple, right, guys? Okay. Household debt has reached $2.12 trillion. I think that's close to what Canada's debt is. Canada's international world debt is like 3 or 4 trillion. But household debt has reached over 2.12 trillion, the big T. So, let's go here. Sorry, I'm just reading the comments as we go here. Canadian household debt reached all-new-time high as growth continued to decelerate. The balance of outstanding credit at large lenders reached 2.12 trillion in June, up 4.1% from last year. That's a big change considering the growth was at 5.8 points last year. All signs point to growth moving lower, as well as the 1-month annualized rate fell 2.3%. Let's break down and see where Canadians are borrowing. Here we go. So these are recession bars here. You see here. And then here's your mortgage debt. And there's your consumer debt. So this is in times 1,000. So this is trillions. Is it? Yeah, it is. Holy Christ. That's a lot. That's phenomenal. No, billions. Sorry, not billions. I'm sorry. Billions. I'm sorry. That's phenomenal, guys. Look at that. Look at that. Hit a recession right there. There's your recession bars right there. There's the 91 crash, and there's the 82 one. Canadians owe over 1.5 trillion in residential real estate. Holy Christ. The Canadian real estate debt binge continued, but at much slower pace. Outstanding mortgage debt stood at 1.51 trillion in June, up 5.52 billion from the month before. The annual pace of growth fell 4.1% to the lowest level since 2001. I read that article, remember, guys? Since we already have discussed what is happening with the lending and rates in 2001, we won't bore you again. Those still curious can take a look. Trip back to Monday's read. I already read that, guys, on Monday. Canadian household debt changed. So we look at this. This is the one right here. So every time these lines go through, there's always a drop right here. There's a drop there. Peak. They go through, they intersect, they drop, they intersect, they drop. They get here, they drop. Look at that. Now it's on a downward spiral right here. Canadians owe over $612 billion in consumer loans. Consumer credits, like the kind you use to finance that blender, reached an all-time high. The balance reached in $612.32 billion in June, up $3.73 billion from the month before. This also represents an annual increase of 4.1%, about 35% lower than the same month last year. Totally not interesting until you realize that consumer growth rate is falling with mortgage growth. Unless we're stress testing car and blender loans for higher rates, consumers are tapped out, or lending is tightening. Either case, the cost of borrowing typically moves higher without the interest rate cut, stemming further demand. So middle class can't afford to buy that blender anymore, and because they just can't borrow to buy that blender anymore. And that's the sad part of it. You know what I'm saying? The slowdown of credit growth shouldn't be a huge surprise to anyone. Household debt has doubled in just over 10 years. Playing a large part of Canadian economy, home prices across the country have also doubled over roughly the same period. This was driven largely by the easy access debt. The slowing growth of credit is going to have some fallout until the credit cycle boosts up again. Surely that can't impact home prices, right? Right? So that's it right there for Better Dwelling, guys. Don't forget to check out Better Dwelling. They actually know what's going on. They actually say it how it is. A lot of people call Better Dwelling fear-mongering and stuff. No. Yeah, Dylan Lopez says, blender loans, damn, you can't afford to buy appliances outright? Yeah, that's what's happening, Dylan. It's getting really bad. I see people in the lineup, and they always tell me, yeah, I'm collecting points on my Visa. You know, I'm buying this Apple, and this bottle of Sprite and a piece of cheese for lunch. And you see, I'm buying this for lunch, and I'm putting this on my credit card because I'm going to collect points. Where are you going to go? To Tahiti? If you can't even afford to eat, like, you know, I'm not even going to go there. TJH, Rockin' River Country Music Festival, Merritt, BC, August 2 to 5th. See you guys there tomorrow. Yeah, guys, I'll be at my shop. If anyone's in the area this week, come by the shop and say hi. Comments are going nuts. So, comments are going nuts. Just my name's going flying around here. Someone's telling me look up something. You guys hear about the 133 jobs evaporated yesterday in Brampton, Dixie Cup closing Brampton plants? Yes, yes, yes. Yes. Yeah. 133 job losses as Dixie Cup plant closes in Brampton. Company blames shutdown on business needs and customer demand. So, company closed plants at the end of the fourth quarter of its fiscal year. It says 128 manufacturing workers and 5 customer service employees will lose their jobs. The company, which informed employees of the closure last week, says the decision comes down to business needs and consumer demand. So that's that. So guys, we're rolling into our second hour mark, guys, and I'm getting really tired. Guys, don't forget to check out my fat face here on my channel. If you guys ever have a chance to, what videos? There's a video here I want to share with you. Sorry. I want to share with you guys on my channel here. Wow, I'm live now, guys. Look at that. I'm live now. Yeah, let's read some comments from this. Canadian... Oops.
YouTubers. Like...
Wrong one. This one here.
Herbs.
This one. Nope. Where'd it go? Ah, here. How the housing crash will affect everyone. It's got 87 likes on it, 6 dislikes, 5 of them don't count. And that's 1,714 views. Some are awaiting, comments are waiting for a review. That's okay, that's good. That's good, I could approve that comment. So I gotta be careful what comments I approve on my channel so my channel doesn't get banned. So here goes. I've been watching your videos. Oh yeah, I like this one. Okay, so Mr. Roboto says, I have been watching your videos from almost the beginning, bro. Then he goes on and says, I say, thanks, man. Mr. Roboto, then I feel sorry for you. 7 years of this guy? He sounds like my ex-girlfriend. Stating what a crash is coming, then finally buys a place way out in nowhere at peak times. And of course, in this rant, he states his method of buying far out and free and clear. He will weather the storm. Sure, but the value of the town will be a ghost town in a major recession. And then I replied and said, too many people moving here from Vancouver. Close to 260 families moved in last month. It's actually 263 families moved in next month alone into Merritt. Place is booming. I did not buy my home to make money off it. My home makes up less than 3% of my investment portfolio. Then Charles Ponzi is a heavyweight here on my channel that knows what's going on and is awake. Says, so baseline, if the value of his house in Merritt goes down, which he owes outright, don't you think that the situation in the city will be far worse with all these delusional folk? He's talking about the city of Vancouver, big cities, over-leveraged to the tits as the credit cycle continues to tighten. How will these people feel? What are you trying to prove here? All you've proven is that you don't understand jack SH about the real nature of this housing bubble that we are in. Let's keep going. Baseline, be nice, man. Why so much hate? And then here's a guy for 7 years, heavily into real estate, I'll assume since he started. Couldn't predict the market 7 years ago and refused to buy, saying something like Vancouver is overpriced and it will crash. So he refused to buy. Now that they doubled, since he could have bought in years ago, he still goes and buys at peak time, free and clear. Sure, that's great. But anyone can buy a home in the middle of nowhere. Just saying, he could have predicted the market 7 years ago for himself. I don't think selling comics in a recession will keep afloat even with no mortgage. Mr. Roboto says, baseline, he's already retired and has the shop as a hobby to keep myself busy. And then I replied and I said, I'm retired. I choose to do this by choice. I know you want to see me crash and burn, as many others do. I don't want to raise my kids in Vancouver with all the hate and antisocial atmosphere. Mike Martin's retired. That's great. I'll be there. Freedom 40. Still didn't time the market when you could have bought in Vancouver 6 years ago. Sold it today and still moved to where you are. No, because the problem is I'll have a hard time selling it today. And not only that, I wouldn't have been over leveraged, but I think I would have lost value on the home if I bought 6 years ago. I could have lost value. I don't know what the situation. We don't know the situation, right? So I kind of... let's keep going. There we go. Mike Hecker comes in and saves the day. What does he say? So what? I've been watching Mike Martin's channel for a couple of years, and he refused to pay $700,000 for an 800 square foot condo. Can you blame him? Where exactly can his kids play? They would be miserable in a condo, let alone the city. So there you go. So someone says, by November, I heard the bubble will burst. Well, we'll see in time. Then the Don says, if people can't see that this is a globally orchestrated takedown of real estate, market, and economy, they are completely blind. Anything over $1 million is sitting on the market for months now here in Nanaimo. Yep. I hope that the leadership mentor real estate gurus feel accountability for their actions. I hope the bankers feel it. And then E-Bank-U says, you speak common sense, my friend. People are blind, and even if delusional, hope for things to go up, 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 so they make money, even though it makes 0 sense. Then Frank I love Frank I. Stop spreading fear just because you missed out on the boom, Mike. Housing will only continue upwards. The bank does not and has never lent money or given mortgages to those that cannot truly afford them. You're very wrong on this, my friend. By now or never. If in a year you will be eating your words. You haven't been right in all these years. You've been calling for a crash. There's nothing going to crash. Housing will see the moon. Then let's see the replies. Frank, then Steve the plumber says, Frank, stop drinking and hitting the bottle so hard, dude. I realize that you're losing a lot of money and your fake paper wealth is evaporating daily, but please do some homework and you'll quickly realize that job losses are starting to rise and inflation rising. Therefore, interest rates are absolutely going to go up shortly. You clearly have no idea how many bad loans are out there, but we are about to find out real fast. Stop with your nonsense, please. Your thoughts and views define all logic. Then I laugh. Then Rome Timed has a really good reply to that. He says, Frank, where's the money going to come from? I have a couple of friends who also believe this, but they are developers. And the only answer I've heard is money from China. Problem is that right now China is locking down people from moving money out and collapsing their own currency. Then Miranda says, nonsense. And then Frank I says to Rome Times, trust me, the Chinese will get it out. They really want to. Also, states will buy here, and Australians and all of the world. Face it, Canada is the hottest market in the entire world. Everybody wants a slice. Buy now or never. And then Charles Ponzi says, Frank, idiot, that should be your name in full display since you're abbreviated the I. And 75R says, once a downturn is set in, the central banks will restart the QE, but the money will be used by investments, not by housing speculation this time. It would be the first time in actual inflation cycle since the 70s. Roads, railways, airports, manufacturing, clean energy, etc. Rates will soar as well as inflation. House prices toast, probably 25% off nominal and other 25% erosion from inflation in general across the entire Western world. Then Tom says, Mike, it's called overpopulation. 100 years ago, there was less people. Population has tripled since. Hence. Some can't afford to live in the city. That's why we have this happening. Also, we in the 20th century had 2 world wars which decreased population, but no world wars since 1950 onwards. And then someone commented on the population thing here. The population of Greater Vancouver in 2001 was 2 mil. The population of Vancouver in 2018 is 2.5 mil. During the same time, the average of new houses being built has been 20,000 per year. It would be about 30,000, perhaps more. The officials are trying to push things before the elections. That's 360,000 detached condos, houses, etc. that have been created in the area. There is way more than enough new homes built to cover the influx. The issues of demographics in a wonky place, very low births, and aging population due to costs, and speculators completely and utterly running rampant with such low interest rates. The overvaluation right now is insane. And if you look at it, certain places away from speculators, you can buy incredible amounts of land and building for pennies. Overpopulation globally is over 100 years ago away and is likely not to occur with the progression of civilization as it's happening. And then someone says, Rome timed overpopulation where people want to live, not overpopulated in regards to livable space. While the homes are created, they are getting smaller too. So lots of comments on this article, guys, if you want to read. It's the video I did. If you want to, I'm going to plug it here. How the housing crash will affect everyone. It's on my channel. It's a really good video because I discuss everything that's happening in the housing market in a nutshell and try and get to my point as quick as possible. And so I'm looking at the comments here, guys. It's getting late. I'm getting tired. Anyways, guys, I'm tuning out. Guys, don't forget to join Walking Journey on this channel. See what he's up to. I'm just looking at comments as we go here. So Grasshopper saying Richmond, BC is having huge price cuts. It's happening right now. Not kidding. No, Grasshopper, I believe you. I know it is. Yeah, guys, I gotta go to sleep. It's getting late. So I'm gonna hit the hay, guys. What time is it here? It's 8:30. I got a lot of things I got to do before I go to... I got to water my garden. I got things I got to do before I go to sleep. And I got to take off this shirt before I go outside because somebody might actually take me serious wearing this shirt. Anyways, guys, Mike Martins, guys, thanks for tuning in. Don't forget to check out my eBay shop, link above in the channel. And don't forget to subscribe to the channel and let people know what I got going on. Good night.